The beginning. A small decision that changed everything. Ethan Parker was 30 years old, earning about $48,000 a year as a warehouse supervisor. Like many people, he believed wealth belonged to doctors, business owners, and people born into money. Every payday disappeared into rent, groceries, gas, insurance, and small purchases that seemed harmless. One afternoon, while waiting for his car to be serviced, he overheard an elderly man talking about investing only $35 every week into an index fund for decades. Ethan laughed to himself. $35? That wasn't even enough for dinner at a restaurant. But curiosity led him to research compound interest and low-cost index funds that evening. The numbers shocked him. He realized that time, not income, was the true secret. That night he opened his first brokerage account and made a promise to himself. Every Friday, no matter what happened, he would invest $35. He didn't expect to become rich overnight. He simply committed to becoming slightly wealthier every single week than he had been the week before. The hardest years. Staying consistent when nothing happens. The first 5 years felt disappointing. Ethan watched friends buy expensive trucks, luxury vacations, and new gadgets while his investment account barely seemed to grow. There were market crashes, inflation, layoffs, and months when investing felt impossible. Sometimes he questioned whether the sacrifices were worth it. But instead of stopping, he automated his investments. Every raise at work increased his weekly contribution slightly. His lifestyle stayed modest while his savings quietly accelerated. Although nobody noticed, something incredible was happening beneath the surface. Compound interest was slowly beginning to work. Like planting a tree, the roots were growing where nobody could see them. Ethan learned that successful investors aren't smarter, they simply stay invested longer than everyone else. The turning point. Compounding begins to accelerate. 15 years later, Ethan was earning much more than when he started, but something surprising happened. His investment portfolio began making more money during good market years than his annual raises at work. Instead of feeling excited about promotions, he became fascinated by watching dividends reinvest automatically and market growth compound year after year. Every market downturn became a buying opportunity rather than something to fear. Friends who once laughed at his small weekly investments were now asking how his account had grown so large. Ethan realized that wealth doesn't grow in a straight line, it grows slowly, then suddenly. The years of patience had finally reached the tipping point where money was beginning to work harder than he did. When investments surpass a full-time salary. After more than 3 decades of disciplined investing, Ethan looked at his annual portfolio growth during a strong market year. It exceeded what he earned from working full-time. The realization hit him like lightning. His investments had become another employee, one that worked 24 hours a day without taking vacations or calling in sick. He no longer worried about losing his job because his financial future no longer depended entirely on his paycheck. Instead of chasing overtime, he spent more time with family, exercised regularly, and volunteered in his community. Financial freedom wasn't about becoming flashy or buying expensive cars. It was about having choices. That freedom had started years earlier with nothing more than a simple decision to invest $35 every week. The lesson. Small habits create extraordinary wealth. Looking back at retirement, Ethan realized the greatest investment wasn't the money, it was the habit. Most people spend years searching for the perfect stock, the next cryptocurrency, or a get-rich-quick opportunity. Ethan discovered that consistency beats brilliance. Wealth isn't created in dramatic moments. It's built quietly through thousands of ordinary decisions repeated over decades. Every Friday deposit represented discipline. Every market crash represented opportunity. Every year represented another step toward independence. His story became proof that ordinary people can achieve extraordinary results by trusting time, remaining patient, and allowing compound growth to perform its magic. The biggest mistake isn't starting with too little, it's waiting too long to begin.